Shri Guru Bhyo Namaha. Om Shri Ganeshaya Namaha. This is part 19 of the presentation of the series of Inflay Pro by myself, Brahmadeshan Narsimhayar Venkataraman. This session we will have 10-year combo plan and related topics on this. Before continuing part 19 of this series of presentations, I would like to mention a few things about investments, as a quite number of friends are asking me again and again how to invest and where to invest, and so as to get 11% return. I am not a financial advisor. However, I give few guidelines to think about it. If you are above 60, invest in Prime Minister Venkataraman Yojana up to maximum permissible amount of 15 lakh rupees. And also secondly, invest in senior citizen saving account up to maximum permissible limit of another 15 lakh rupees. Then thirdly, we can have RBI bonds and corporate bonds, etc., or mutual fund, liquid funds and bond funds, etc. Then in mutual fund, debt fund schemes. Let all the above be within 30% of your total investments. Then suitable equity of mutual funds such as index funds, sector-wise or large cap, mid-cap, etc. Then only in the stock market. If one's investment are of the order of 1 crore and above, then to consult personal finance advisors and portfolio managers like sinceresyndicate.com. For age group of 30 to 40, a little money be regularly invested in funds like ICICI Lifetime Super Pension. In that too, one should take insurance coverage of nil amount or just rupee 1, so that there is no mortality rate deductions. Remember that it is a pension plan and not a insurance plan. The past performance in this scheme of this ICICI Lifetime Super Pension was 13% for cumulative over 10 years period. The problem is only 1/3 of the maturity amount is commutable, and balance any market players of pension and pension rate are of the order of 6% only. So invest of the order of only rupees 25,000 per year on these corpus building and linked pension schemes. At the age of 30s, do not miss an NFO or IPO. Nowadays, there is no IPO of rupees 10. All are overvalued ones. So, one can apply little bit of fundamental analysis of the company. Better to consult financial advisors right at the age of age 30. Finance advisors charge from rupees 500 to 3,500 per month or on commission basis. Even then it is worth it. A number of them guide you to earn around 14% in 5 and 10 years period. You will also need tax consultants, portfolio managers, legal advisors, chartered accountants, etc. Many financial advisors provide all under one roof. Let us go into the combo plan for 10-year pre-retire and 10-year post-retire scheme. Pre-retirement period corpus building fund period is 10 years. Premium payment term is same 10 years. Moratorium period is 0. Post-retirement period is 10 years. Periodicity or frequency is monthly. Current value of pension amount is 35,000 rupees per month. Value of pension after 10 years. Okay, this is build up plan. We will see later. Inflation protection desired is 6%. Small period inflation is off. Growth percentage code is default 181.94% or maturity is 1.8194 times principal, that is corpus fund, that is principal, that is corpus fund. Interest or internal rate of return is 11%. Value of pension after 10 years is 62,680. Yes, I have corrected this figure. Value of pension after 10 years is 62,680 rupees. Outcome. Inflay Pro systematic investment plan varying from 54,746 to 92,495 in 120 months, totaling 87 lakhs. Inflay Pro systematic withdrawal plan, that is varying, is 62,680 per month to 1,05,000 and odd, totaling 99 lakhs. Further payment is 3,72,533. Say 3,73,000. See, this further payment is affected on the final maturity period on day 1 after that period, because our installment started on the very day of the investment period. If there is a one, it's in the case of monthly then, if there is a 1 month delay, then it is a late payment. If it is on the first day of the policy date itself, because the investment recurrent deposits or the corpus fund generation is generated, it matured on a particular date. On that date itself, the pension account is opened and the first pension will be on that first day itself, on the date of the policy itself. Therefore, this further amount is affected. Corpus fund at the time of retirement is 1 crore 50 lakhs. Maturity at the end of 10 years is 2 crore 73 lakhs or 1.8194 times the corpus fund. This is explained in the tabular column. Output as follows. $87 lakhs is the investment, 1.50 is the 1.50 crore, 1 crore 50,000 is the corpus fund. Systematic withdrawal plan is amounting to 99 lakh. Further payment is 3,72,000, that is approximately 4 lakhs. Maturity amount is 2 crore 73 lakhs. The gross benefit is 3 crore 76 lakhs. In the above, there is a problem arising out of this. The investment at start of the period is 54,746 per month, which is more than the current value of the pension of 35,000 rupees. This means that at 11% return and 10 years investment period is insufficient to generate the desired pension as well as growth of the principal. Therefore, one has to either increase the return 12.8 to 12.8% or more to say 13% or decrease the growth rate. Let us redefine growth as default 118%, that is 1.81 times the principal. The outcome would be like this. Systematic investment plan 34,957, that is less than 35,000 rupees and varying up to 59,000 rupees, and total is total investment is 55 lakhs and corpus fund generated is 96 lakhs. Systematic withdrawal plan amounts total amounts to 99 lakhs. Further payment is 1.54 lakh, 1 lakh 54,000, is approximately 2 lakhs. Maturity is 1 crore 13 lakhs. This is very much different from the previous figure of maturity figure 2 crore 73 lakhs. That is, we are not getting the full growth. We are getting some partial growth. Okay. This is in order to invest with starting figure of 34,000, that is less than 35,000, we have to sacrifice the growth of the principal to 1.13 crore instead of 2.73 crore of earlier case. Let us analyze the above default 181.94 growth and conventional pattern with same end benefits. The summary of conventional scheme without inflation protection but with growth of principal is 68,000 rupees starting amount as systematic investment plan, and it is uniform throughout. And systematic withdrawal would be 78,420 rupees uniformly. That is, the total investment is 82 lakhs. Corpus fund generated is 1.5 lakhs, 1 crore 5 lakhs, 1 crore 50 lakhs, 1.50 crore. Systematic withdrawal plan with uniform rate is 94 lakhs. Further payment is 3 lakh 72, that is same as previous case. Maturity amount of 2.73, same as our previous case. Without inflation protection during the policy term, the investment would be of 68,494 at a uniform rate totaling to 82 lakhs. As against our high investment of 96 lakhs in our InflePro case, a difference of 7 lakh rupees. And pension would at uniform rate would be of 78,420, totaling to 94 lakhs, as against very InflePro of 99 lakhs, a difference of 5 lakh rupees. All this indicate that we will not be able to fight inflation with 11% return in 10 years pattern. The solution to the problem with only 11% return is that we should invest for a minimum of 14 years with 14 years pre-retirement and 14 years post-retirement. If we want to restrict to 11% return and 6% inflation protection, minimum period should be 14 years before retirement and 14 years after retirement. The 14 year span, the output of combo plan will be like this. The investment starts just at slightly less than 35,000 rupees, that is 34,499, and uniformly increases by year by 6% at 59th age. That is, at the completion of 59th age, we would have deposited 73,000 per month, and return on the 60th year. Then 60th year completion, we one can start getting a return of 79,000 rupees 131. It is higher than the last installment we paid, and it goes on like this. And there is no sacrifice. The surrender value after the term is 4 crore 32 lakhs for this amount. That is 202.3, 231% of the principal. Principal was 1 crore 87 lakhs, 1.87, that gave a return of 4 crore 32, and overall gross return was 6 crore 37 lakhs. This fights inflation at the 6 months. The PDF link is given in the description box and can analyze leisurely. Now let us go to the demo session of the website. How we got the elections, etc. See, we go to bnvenkat.com. See our usual website. If you do not know, I will retype it and take it bnvenkat.com and go to combo plan. Say the pension is 35,000 rupees per month of the current value. Then 11% rate of interest, 11% rate of interest, and let us take current age as 50 and retirement 60, that is 10 years period of corpus building, and expected maturity 70 years. Now we will have auto session, that is auto is on now. That is the growth will be automatically calculated. It is not 100%, whatever is here will be replaced after supplying the inflation percentage. The frequency is monthly, and let the inflation percentage be 6% and submit. See, we have got the figure 54,796 as the first installment of the recurrent deposit. That is, during the corpus building term, we will start with 54,000 rupees, and by 60th year of age, get 62,000 only. This means we are not fighting the inflation trend. We can also see from the last installment of payment is 92,000 rupees, 92,000 rupees per month, and the return is only in the next year 62,000. That means we are not fighting against the inflation. This is the same chart which I have discussed earlier. Now let us see with 14 with 14 years. That is, let us say current age is 46, retirement is 60, and 74 is the expected life. There is 14 years pre-retirement and 14 years post-retirement. Let the auto be on. Now let the in this auto case it will become 1.81 monthly, and loan of pension may come across. Now it is within the 35,000 rupees range. That is, the first installment of our payment, first installment amount for deposit is less than 35,000 rupees. And in 59th year, it is 73,000 rupees, and we started getting return of 79,000 rupees per month from 60 age onwards. Here, this satisfies the inflation protection theme. I am not showing the demo of the Mm, Demo of 10-year scheme constantly that we have to check from another program. That is, if you want to do it, I'll check it. I'll continue that in the next session. Thanking you. Thanks for watching. Please, those who are not yet subscribed, please subscribe, comment and share. Now let me close the session. Thank you all.